Good morning and welcome to Tuesday Coffee with Dr. Anna. Grab your coffee because this week we've got something really interesting happening in markets. The US just delivered a major job surprise. The economy lost 23,000 jobs in July, while markets had expected roughly 80,000 new jobs. And it wasn't just July. Previous estimates for May and June were revised down by more than 100,000 jobs combined. So the American labor market suddenly looks considerably weaker than we thought. But here's the interesting part. You might expect weak economic data to send markets down. Instead, stocks rallied and gold rallied too. So what's going on? The answer is interest rates. Weak employment data changes the calculation for the Federal Reserve. Only a few weeks ago, the Fed kept interest rates at 3.5 to 3.75%. But that decision wasn't unanimous. The vote was 9-3, with three policymakers wanting to raise rates. The Fed is still worried about inflation, but now it has another problem. Employment is weakening, and that creates a much more difficult balancing act. Raise rates too much, and you risk putting even more pressure on the economy. Keep them high for too long, and you could accelerate the slowdown. But ease policy too quickly, and inflation could come back. So why are stocks rising? Because weaker jobs data can mean less pressure for higher interest rates, and lower expected rates can be supportive for equity valuations. Still, that's why bad economic news sometimes becomes good news for markets. Investors are anticipating what the Federal Reserve might do because of it. But here's what makes this week particularly interesting. Gold is rising as well. Normally, when equities are approaching record levels, you'd expect less appetite for safe havens. But we're seeing demand for both. Why? Partly because lower rates make gold more attractive. But there's another factor, geopolitical risk. Renewed tension around Iran and the Strait of Hormuz is keeping demand for safe havens elevated. Stocks and gold rising together may look contradictory, but they're telling us something about the same underlying environment, macroeconomic uncertainty. Equity investors look for ease, gold investors look at risk. At AME, this is what we're trying to do differently. Not simply tell you what happened, but connect the dots between the economy, interest rates, equities, bonds, commodities, and risk. The real question is why it happened and what the market is telling us next. For me, the next major thing to watch is whether this employment weakness is temporary or the beginning of a broader deterioration. I'm Dr. Ana Armstrong, founder of AME. If you'd like to explore the analysis behind these conversations, join us at AMI. I'll see you next Tuesday. Coffee in hand.